are here today to present FDIC's Charge It Right. My name is Terry Boffman, Vice President with the Bank of San Juans.
And I'm Stacy Horner with Bank of the San Juans.
Let's go ahead and get started.
Okay. Welcome to Charge It Right. You are taking an important step towards understanding the value of credit cards by taking this module. After completing this module, the participant will be able to define credit, explain why credit is important, describe the purpose of credit cards, determine if you are ready to apply for a credit card, determine which credit card is best for you, identify the factors creditors look for when making credit decisions, describe how to use a credit card responsibly, identify the steps to take when a credit card is lost or stolen.
So with that said, on page 4 of your workbook, there's a pretest. And so we're going to go ahead and go through this. We'll read the questions and the supposed answers, and then we'll give a few moments for you to choose your answer. And this will kind of give you an idea of what you may already know about Charge It Right. So let's get started. Number 1, select all that apply. Credit is A, money given to you that you do not have to pay back. B, money that you borrow to pay for things but must pay back with interest. C, safer and more convenient than carrying cash. Or D, money you have saved for larger purchases. And the answer is B, money you borrow to pay for things that you must pay back with interest. And also C, safer and more convenient than carrying cash.
Number 2, having a credit card and good credit provides many benefits. They include all of the following except A, you could make large purchases and pay for them over time. B, it may be easier for you to obtain employment or purchase a home. C, they can be useful in times of emergencies. Or D, you pay interest charges on any balance you carry on the credit card. And the answer is D, you pay interest charges on any balance you carry on a credit card.
Number 3, you should consider which of the following when determining if you are ready for a credit card. Select all that apply. A, whether you can afford the monthly payment. B, which credit card has the lowest introductory rate. C, you will purchase with the credit card, needs versus wants. And D, how much you will pay for items when paying interest versus saving and paying with cash. And if you selected A, whether you afford the monthly payments, C, what you will purchase with the credit card, and D, how much you will pay for those items, you've selected correctly.
Number 4, before applying for a credit card, the most important thing to read is the A, truth and lending disclosure for the credit card. B, financial institution's lending policy statement. C, credit card perks and reward systems. Or D, monthly credit card statement. And the answer is A, the truth and lending disclosure for each credit card.
Number 5, when you want to apply for a credit card, you should A, apply the first offer you receive or find. B, apply for retail store cards only. C, compare several cards and choose the one that seems best for you. Or D, apply for credit cards with the lowest intro rate. The correct answer is C, compare several cards and choose the one that seems the best fit for you.
Number 6, factors that credit card issuers take into account when deciding whether to issue you a credit card include A, your credit history, B, income, C, your current debt, or D, all of the above. And you would be right if you said D, all of the above.
Number 7, if the annual percentage rate, APR, increases on your credit card, what will happen to your credit card payment? A, it will also increase. B, it decreases since the credit card company pays a higher percentage of the payment. C, it stays the same, but you have to pay over a longer time. Or D, it stays the same but the credit limit is reduced? If the APR increases, it's A, your payment will increase.
Number 8. What is the first step you should take if your credit card is lost or stolen? Should you A, review your statement to see if any purchases were made by someone other than yourself? B, file a police report? C, call the credit card company immediately to report the lost or stolen card? Or D, have a new card issued? The very first step you should take is C, call the credit card company immediately to report it lost or stolen.
Number 9, which of the following accurately describes credit cards? A, they always allow you to make unlimited numbers of purchases with no set dollar limit. B, they are used to purchase goods and services and pay for them over time. C, you must always pay the balance in full each month. Or D, when you purchase items, the money is withdrawn from your checking account. The answer is B. They are used to purchase goods and services and pay for them over time.
And number 10, how can you reduce the interest you pay on a credit card in time to pay off the debt? A, failing to make the minimum payment. B, pay more than the minimum payment. C, pay the minimum payment. D, pay off the balance in full each month. Or E, B and D. And the correct answer is E, B, and D. Pay more than the minimum payment and pay off the balance in full each month. So let's talk about credit. What is credit? If you ask a financial professional what credit is, which of these would this person choose? 1, money given to you that you do not have to pay back. 2, money you borrow to pay for things that you must also pay back. 3, recognition for a job well done. Or 4, long scrolling text at the end of a movie. It's actually 2, money you borrow to pay for things that you must also pay back. Credit defined. Credit, the ability to borrow money. A loan is an agreement to borrow money on credit. Collateral or guarantee, security or asset you pledge to the lender in case you cannot repay the loan. And interest is the cost of borrowing money. What is the importance of credit? Why do you think credit is important? Because credit can be useful in times of emergencies, is more convenient and safer than carrying large amounts of cash, allows you to make a large purchase such as a car or house and pay for it over time, and it can affect your ability to obtain a job, buy or rent a house, or obtain insurance. Having good credit means that you can make your loan payments on time, and it will be easier to borrow money in the future. If you have problems using credit responsibly, it will be harder to borrow money in the future. So let's take a look at Steve and Maria. Steve and Maria need another car. They have some money to put down on a new car, but they still need to borrow about $10,000 to purchase it. If they do not or cannot pay back the loan, what might the lender do? The car is collateral, so the bank can repossess the car and late payments will affect your credit. Credit cards. Credit cards are a revolving line of credit with pre-approved dollar limits, minimum monthly payments, for example, $15 for a $600 balance. Charge cards require you to pay the entire balance every month, and a debit card, they are tied to a checking account. So let's take a look at debit cards versus credit cards. Terry, can you help me do that?
Absolutely. I would love to.
On debit cards for your payments, you buy now, pay now.
On a credit card, you buy now and pay later.
Interest charges for a debit card, there's no charges apply as funds are automatically debited from your checking account.
On a credit card, though, charges will apply if you carry a balance or your card offers no grace period, time to repay without incurring interest charges. And we're on page number 7 of your workbook.
Fees. Fees on certain transactions for a debit card, such as an ATM, These fees can be charged for withdrawing funds from an ATM not operated by the financial institution that issued your debit card. Potentially costly fees if you try to spend more money than available in your account.
But on credit cards, fees and penalties can be imposed if payments are not made timely. Some cards also have an annual fee, so you have to pay an annual fee for that credit card. But not all cards offer grace periods, and that's the time that to repay without incurring any interest charges. So pay attention to that as well.
Other potential benefits of having a debit card: it's easier and faster than writing a check. There's no risk of losing cash that you cannot replace. Some cards may offer freebies or rebates, and as long as you do not overdraw your account, debit cards are a good way to pay for purchases without borrowing money and paying interest.
Now, credit cards, though, they also sometimes have freebies. They might have some cash rebates, rewards points, travel deals that you can pay attention to. You can withhold payment on charges in a dispute. You can get purchase protection offered by some cards for faulty goods if you buy an item that is faulty. Or if you're careful about how you manage your credit card, especially by paying your bill on time, your credit score may go up and you may qualify for lower interest rates on loans.
Other potential concerns as far as debit cards go: usually there are no protections against faulty goods and services. You need another way to pay for unexpected emergencies if you do not have enough money in your bank account.
Where with a credit card, overspending can occur since the credit limit may be higher than you can afford. If you do not pay your card balance in full each month, or your card does not have an interest-free grace period, you will pay interest. This can be costly, especially if you're only paying the minimum each month for the credit card. We want to make sure that you also understand on the bottom of page 7, the federal law limits your losses to a maximum of $50 if your credit card is lost or stolen. So that means if somebody steals your card or uses your credit card information, your maximum loss for that would only be $50, although you need to make sure you report that card lost or stolen immediately. With a debit card, your maximum legal liability is $50 if you notify the bank within 2 business days. So it's really important to understand that the liability with a credit card, if it's lost or stolen, can be a little higher than if it was your debit card.
So let's dig into some other cards. Let's look at store valued cards, secured and unsecured credit cards, gold and platinum cards, reward cards, and pre-approved cards. Some tips for these other cards: make sure you're reading your disclosures before you apply. Look at your fees and penalties, understand your consumer protections, and take precautions to protect yourself from fraud or theft. So stored valued cards. There are 4 main types of store value cards. Payroll cards are used by employers to pay wages instead of giving you a paper check. Payroll cards are unique from other types of store value cards because you do not need to purchase them or pay activation fees since your employer provides this card. A government disbursement card: they are provided by government agencies to pay benefits. One example is the Direct Express debit card for Social Security payments. General purpose cards can be purchased from retailers. Some come with a set value, while others require you to load money to the card after obtaining it. And gift cards: they can be purchased in fixed amounts. Unlike most other store valued cards, these often can be used to redeem for purchases from particular stores or restaurants. The use of store value cards will not allow you to build a credit history because no money is being borrowed. How can you wisely choose or use a prepaid card? Look into the fees, which can add up if you are not careful. Understand your consumer protections, which may vary depending on the card you use. Take additional precautions to protect yourself from fraud or theft.
We're on page number 8 of your workbook, and we also want to talk about secured and unsecured credit cards. Most credit cards are unsecured, and so what that means is that you apply for the credit card, and the credit card company determines the limit based on your credit capacity to pay back on that. But if you are brand new to receiving credit and you may not have a credit history, then there are secured cards. And on those secured cards, what happens is you pledge part of your savings for that card, so it's really your money. Say you apply for a card of $500, and then the secured card actually secures that $500, which is your money, but it helps you to build credit by having a secured card. So most credit cards, like I said, are unsecured, But if you're just establishing credit, you can get a secured credit card.
Gold and platinum cards, these are credit cards traditionally with higher credit limits. Requires a good credit history and higher income and may offer rewards. Not all gold and platinum cards have the same favorable terms, however. Be sure to carefully read the disclosures before you apply for a gold or platinum card.
Another kind of tip or advantage for a credit card is many cards out there now have rewards. So you can get cash rebates, some reward points, or you can shop on their online portal. So just making sure that you look for those reward cards, but understanding also how do you gain those rewards and how long do you have to use them and how those really work. So a great tool for a card is a rewards points for your credit card.
And pre-approved cards. Credit card companies may offer you a pre-approved credit card in which you might qualify for the interest rates and credit limit being offered. So whether or not you get the best rate depends on your income, employment, credit history. Always read the credit agreement carefully before you sign on a dotted line. Be aware of limitations or conditions that are obvious in the advertisement and shop for the best possible deals. So, the Truth in Lending Disclosure Statement. This is on page 9 of your workbook. We're going to kind of dig into this and take a look at it. So this is required by federal law. It must highlight rates, fees, and other key terms. And it has a sample interest rate section of the disclosure. Your credit card terms. When shopping for credit cards, compare your annual percentage rates for purchases, balance transfers, cash advances, penalty APR, and when it applies. A lot of credit cards will actually charge you more for a cash advance. So you want to take a good look at that. Fees, such as an annual fee, your grace period, if there is one, and balance computation method. Penalty APR. A penalty APR is a permanent rate increase if you do not pay your credit card bill on time. This may double your regular APR. So look for details in your Truth in Lending disclosures. APR increase on new transaction. This APR that applies to new transactions generally cannot increase for a year from the date the card was issued, except if you have a variable rate card and the index increases or promotional rate expires. The creditor must notify you 45 days in advance of this, and you can cancel the card before the changes take effect. Your annual percentage rate, the APR, the cost of borrowing money on a yearly basis, it's interest plus fees. Look for a low APR. Compare annual fees and other charges. Some credit cards don't have an annual fee, some do. Determine how long the introductory rates will last and whether the new rate will be fixed or variable. The APR on money you owe for charges you made in the past or existing balances generally cannot be increased unless you are told about the increase when you open the account and the initial rate lasts at least 6 months. There is a change in the index base rate. You don't satisfy a workout agreement and you do not make the required minimum payment within the 60 days of the due date.
Next on your workbook, page number 9, we're going to go into some details on fees. So annual fee could be an annual fee on your credit card, late fees if you were to make a late payment on your credit card, over the limit fees. Some cards will let you actually opt out of going over the limit, but if you opt in and go over the limit, there could be fees involved with that. Balance transfer fees. So for instance, if you find another credit card that has a lower annual percentage rate, you might want to transfer that balance over to a new card, but make sure there's not a balance transfer fee on your existing card. Cash advance fees, just like Stacy mentioned earlier. So most cards are going to charge you a higher rate if you get a cash advance on your card. Credit limit increase fees. So you may ask if you can get an increase on your credit card, and there may be a fee for that, and you need to make sure you ask about that. Or foreign transaction fee. If you happen to go to another country or make a purchase from another country, there could be some additional transaction fee for that purchase. So let's look at a grace period to avoid finance charges by paying your balance in full or making the minimum payment on or before the due date. On page 9 of your workbook, it also talks about the balance computation method. And so this is how the credit card is calculating your average daily balance. So they take the balance that you owe times the annual percentage rate of the card times the days in the billing, which is usually a 30-day billing cycle, and then divide that by the 365 days in a year. So on this particular card, their APR is 10%. So they took the balance of $200 times the rate times the 30 days in the billing cycle divided by the 365 days. And so they're charged $1.64 a day for that card based on a $200 balance. On page number 10, we're going to start going into some of the other details that you want to make sure that you look for when you're applying for a credit card. And one of those is customer service. These are features via telephone and internet that may allow you to access your account information, and it might let you look at your balances and recent charges on your card. You can pay your bill online or update personal information such as your address. Other key terms to be aware of. Laws that protect you against billing mistakes and unauthorized charges. And that information we'll talk a little bit about in detail as well. Additional protection on the card, maybe an extended warranty period on certain purchases. But take time to fully understand the costs and benefits and the true coverage of that credit protection or debt suspension programs. So make sure you read the fine details. We always say that, but we're really serious about making sure you read that fine print. So again, on page 10, when we're talking about credit card limits, is the maximum amount of credit that the credit card company granted you based on your factors, your credit history, your current income, and other debt that you might have. Again, making sure that you're looking at the option to opt in if you wanted to have an over the limit transaction. And remember though, that they can impose a fee if you opt in for that option. On page 11, let's kind of review how should you apply for a credit card, and where to apply for a credit card. Where do you think you might be able to go to apply for credit cards? Banks, stores, the internet, or all of the above? So let's take a look at page 11 and kind of talk about a really nice tool for you to use to compare when you're looking for a comparison tool for looking for a credit card. So what you might want to do is just consider if there's 3 different cards that you're looking at. So put the name of the credit card on there. What's the APR? Do they have an introductory rate? What is the rate for purchases? What is the rate for cash advances? And they all have that. And if there's a penalty on that rate, what are their fees? Is there an annual fee? Is there a late fee? Is there an over the limit fee? Is there a cash advance fee? And other fees. Is there a grace period? Yes or no to those. Are there other benefits like rewards and points and rebates, etc.? What's the credit limit? So you can jot that down for those options. And then other things to consider would, again, be customer service, hours, online access, and access to a real person if you needed to ask some real questions. So Stacy, on the bottom of page 11, let's kind of talk about tips to consider when shopping for a credit card. So before signing up for a credit card, consider these tips. Review online services and compare credit card companies.
Make sure you understand the implications of fixed and variable rates and penalty APRs.
Beware of introductory rates. Many times they might lure you in with 0 interest for 6 months, but after that time, that rate might jump to 25%. So make sure you're paying attention to that.
Decide how you will use the credit card and what you will purchase with it.
Start small. Do not charge too much on your credit card until you're comfortable with the monthly billing and how that process works.
Shop around for the plan that best fits your needs. Make sure you understand the terms of the plan before you accept the card. Read the fine print.
Be aware of credit cards who require application fees. Most cards do not require that. So if in fact you are applying for a card and it has an application fee, go search for another card. On page 12 of your workbook, you're going to have some information about opting out. And here's what happens. Many times when you apply for credit, or credit cards in particular, you become put on a list, and then you might start receiving what I call junk mail, either mail in your personal mailbox or even via email. So if you would like to opt out of receiving those offers, here's a phone number and a website so you can get yourself taken off of those lists and not receive that kind of information anymore. On page 12, let's talk a little bit about individual versus joint credit. So individual credit is based on your own assets, income, ability to pay, and your credit history. You're responsible for paying on this credit card bill. If in fact you're applying for a credit card as a joint owner or joint ownership, it's based on the assets, income, ability to pay, and credit history of both applicants. Both applicants are responsible for the credit card bill. On page 28, it talks about application requirements. A consumer must be consumers under age 21 must have a cosigner or prove the ability to make the payments. If you are a parent, be prepared to request a cosign for your student if they're under 21. Provide accurate information on the credit card application, because giving false information on a credit card application is a crime. Again, we're going to talk about the 4 C's, and I know that we've talked about this in other modules too, but again, when we're talking about credit cards, these are the things that are really important to remember. The capacity, your ability for present or future to make those payment obligations. Capital, the value of your assets and your net worth. Again, what assets you own, maybe what savings you have. Character, how have you paid your bills in the past and any other debts that you might have. And then collateral, what property or assets offered to secure the loan, if that's a part of it. So let's go into detail and talk a little bit about these again. On page 13, capacity. How long have you been on your job? That's a big deal. And not only that, but how often you switch jobs. If a lender is looking, or a credit card company is looking to possibly give you a credit card, they're going to look and see how long you've been on your job. If you've been on one job for 6 months and another one for a year and then another one for 8 months, they might consider what we call a job hopper. Now, if in fact they can see, though, that each time you've increased your income, it might make sense, the reason why you've switched jobs so often. How much money do you make each month? And then again, what are your monthly expenses? So they're looking at how much money you bring in and how much money you take out, so that they can see if you have the capacity to make that payment. Capital. How much money do you have in your checking or savings account? Again, you need to start saving so that you can have that information that you could put on your credit card application. Do you own a home? Do you have any investments or other assets, like a car, that you can list on your credit card application? How about character? Have you had credit in the past? How many credit accounts do you have right now? And have you ever filed for bankruptcy? Had any outstanding judgments? Had property repossessed or foreclosed? Or made late payments? So remember, they're really looking at your character and how you handle your current credit. Collateral. Do you have assets to secure the loan beyond your capacity to pay it off? And what that really means is, say for instance, you get a credit card, and even though you may not have collateral on that credit card, they may look at saying, oh, they own a home, oh, they own a car, they have some other assets that they have that could be used as collateral. Again, it's just building up that collateral and making the lender feel more comfortable with giving you that credit card option. So what are creditors looking for? We've discussed what information creditors look for in order to decide whether to give you credit, but where do you think they might find that information? So let's take a look at page 13 of your workbook. This is going to give us an example of a credit report. So your credit report tells the creditors a bunch of stuff about you. It tells them who you are, how much you owe, whether you've made payments on time, whether, again, you have any collections, judgments, bankruptcies, and how many credit report inquiries you've had in a certain amount of time. So when we look at page number 13, we're going to talk about Kathy. And so Kathy has no history, and that's no mystery. She's 25. She's never had a credit card or a loan. She has no credit history except for an inquiry by her landlord when she went to go rent. So how will a creditor decide if Kathy is a good risk? On the bottom of 13, we can kind of talk about that. So again, she doesn't have any credit history, but remember, her landlord pulled a credit report. So she can show that she pays maybe her utilities on time because they can see that she rents. Maybe her employment history because she must have a job if she's renting. How about the credit card, making sure she doesn't have any bankruptcies? And then they're again going to compare income to debt. She could possibly apply for a secured card since she doesn't have any current really credit report history and establish her credit, or she can consider maybe have a regular consumer loan for her car payment. On page 14, the different reporting agencies that actually supply credit reports for the consumers is Equifax, Experian, and TransUnion. So we'll talk about those. On page 14 also, it gives you the opportunity to get your free annual credit report. I know that we've talked about this in the past too. So there's a website, a phone number, and they can mail you your credit report. And it's a really good idea to stay on top of your credit and make sure that you get your free annual credit report. Let's talk a little bit about credit scores on page 16. So there are a couple of different ways that creditors are looking at your credit score, and a number of these numbers help the lender determine what your credit risk is. So there's two types. There's the Fair Isaac score, or what we call FICO score, and the Vantage score. So on the FICO score, on the low end of a FICO score is 300, and on the high end with probably A+ credit, it's 850. On the Vantage score, their scores are just a little bit different, and those on the low end are 501, and a high A+ score for Vantage is 990. So what happens is between FICO and Vantage, they're just looking at some different options when they're calculating their scores, and lenders are very interested in looking at that because they're kind of grouped together. So what happens is they compare your info with thousands of others, and then that's how they kind of group those scores together to figure out what the lows and what the highs are. So it's really good to make sure that you try to keep yourself at a credit score for sure. We already talked about making sure that you get your free annual credit report. And on page 15 of your workbook, you're going to see a sample of an annual credit report request form. So you would submit this form, and you can either do that electronically or you can do that with a paper application. So you're going to complete all that information to get your free annual credit report. Here's another thing to know on page 16. If your credit request is denied, a denial is sent or an adverse action is sent to you. And on that information, it lists the reasons why you were declined. The credit card companies must give you reasons why you were declined. Contact the credit bureau within 60 days of receiving this information, and they're required to send you a free copy of your credit report. And that way you could just make sure that the items that you got declined for are really items on your credit report, and maybe it's something you need to review. But it'll actually show how many times you've been late, if you've not made payments, if you skipped payments. They're going to see all of that stuff. But if there is a dispute, you have the right to dispute that with the credit reporting agency as well. On page 17, we're going to kind of look at and review some of this information. So this is the credit card statement information. It's going to show account summary, your payment information, credit card counseling statement, the notice of interest rate changes if there were any, transactions or account activity, that's either payments or charges, and then the interest charge calculation. So as we look at that, I guess we're going to look at that in a minute. I apologize. So on page 17, it's going to kind of talk about each of these specific areas, and then we'll look at a sample so we can actually see them. So under the account information, it's going to show what your previous balance was. So it's going to show the balance from the previous month. It's going to give you your new balance. So that's the new balance, including any purchases or payments that you might have made to your card during the month. It's going to show your credit limit. So that's the maximum amount of the money that you could borrow against your credit card. And then it's also going to show you what credit you have available on that card.
It's also going to talk about the payment information. So it's going to list your new balance, the minimum payment due, the minimum dollar amount that must be paid. Keep in mind this may be only 3 or 4% of your balance. The payment due date, the date your payment must be received by the credit card issuer, not that the date it is postmarked. The payment due date for your credit card must be on the same day each month. Be sure to make sure your payments are there well before the due date to avoid late charges. It's got a late payment warning, which is an explanation of how your account will be affected if you do not make your payment on time, and a minimum payment warning, the monthly payment amount required to pay off the existing balance in 36 months, including the total cost. The Federal Reserve's credit card repayment calculator can estimate how long it will take you to pay off your credit card balance, and there's a web page for that.
It also is going to have the credit counseling statement. So it's going to give you some information if you do need to consult a credit counseling service to help you with your debt. It's going to give you a notice of the current interest rate changes, if there are any. They're going to have transaction history, so any finance charges, an annual fee, and then interest on your purchases for the month, as well as an interest charge calculation. So we're going to take a look at a sample statement, and again, we want to make sure that you understand to keep your credit card receipts every month. Keep those so you can compare it to your statement, so you can make sure that that information on your credit card statement is accurate. Check your monthly statement for any mistakes, and then report those mistakes right away if there's an error on your credit card statement. So let's take a look on page 18 and really look at this sample, this example of credit cards. And just like Stacy and I kind of outlined a minute ago, you can see in the area number 1 that has a previous balance, any payments that were made, some charges, and your new balance, along with your credit limit, the available credit, the statement closing date, and that's important to know, and the days in the billing cycle. It's going to talk about payment information, the late payment warning, and it's going to show the APR for that, and the minimum payment warning. So just making sure that it's supposed to tell you how many months, if you made the minimum payment, how long it would take for you to pay off that credit card. Has an area for customer service if you have any questions, or if you've lost your card or it's been stolen. Number 3 also, again, has the credit counseling information for you. Area 4 talks about notices and changes. So this particular credit card, and this is really important for you to pay attention to. So it is telling this consumer that they've triggered a penalty of 28.99%, and that's impacted their credit card. And it says that their transactions were made on or before 4/2, and as of 5/10, the penalty will apply to those transactions. Transactions made before that time will be the other rate. So make sure that you're really paying attention to. There seems like there's a lot of detail and extra information on this statement, but it's really things you should be paying attention to so you're aware of that. You'll see in area number 5, it's got purchases and information on that, but make sure that you're paying attention to the fees area. A late fee on this card is $35, and minimum charge is $2. So make sure you're paying attention to that area, and then again, it shows you the interest in that area. Credit card companies are required to tell you in section number 6 the total years it would take for you to pay off that card, and the fees that are involved with that. So pay particular attention to all of that information. And we'll talk a little bit later about if you make extra payments, how much quickly you could pay that off and save yourself some interest. So let's talk about minimum payment. Which of the following is a good reason to pay more than your minimum payment due to your credit card bill? It'll look good on your credit history because it's showing that you're not only paying it on time, but you're trying to pay that debt off quicker. You'll be able to spend it again in higher amounts. So the more you pay back to the credit card, the more available credit you'll have on that credit card. The credit card company might increase your limit quicker. Many times, if you get a credit card and you use it wisely and you make your payments on time and you pay it off every few months, the credit card company might go ahead and increase your limit because they think that you're a good risk. And you can pay it off quicker and save on interest charges, like I said before. On page 19 of your workbook, it kind of talks about outlining the cost of the minimum payment. So here's an example that if you had a television and the price was $500, the rate is 18%, interest paid is $132, total paid is $632. It would take you 3 years to pay that off. A computer, it gives you that information again, just like I spoke, and it's going to take 8 years to pay it off with just paying the minimum payment. Furniture, same thing. Has a dollar amount, the rate, how much it's going to cost you, and it would take you 23 years to pay off that $2,500 with that rate and just paying the minimum payment. Good information for you to pay attention to, because what's crazy is you can see it's going to take you 23 years to pay off that furniture, and you only borrowed $2,500. By that time, you've probably bought 2 more sets of furniture. So pay attention to that and make sure you try to pay it off quicker. On page 19, we're going to again kind of look at what if you did pay extra on your card. So when we look at that $2,500 on that furniture at 18%, and remember, it would take 23 years to pay that off if you paid only the minimum. But take a look if you took the minimum payment, added an additional $24 a month, just $24 a month you add to that. It would only take you 4 years to pay that off. And look at the difference in the interest you paid. Over 23 years, you would have paid over $5,300 in interest. By paying that little bit of extra, you're only going to pay a little over $1,000. And then the last scenario shows you making your minimum payment plus $41 extra a month. You would have that furniture paid for in 3 years. And look at the difference in the interest paid. Takes it all the way down to a little over $700. So it's always a really good idea to try to pay more if you can. Stacy, let's look at page number 20 of the workbook and kind of go through the tips for using their credit card responsibly.
Okay.
So check your monthly statement to verify that it's accurate. Call your creditor right away if there's any errors on your statement.
Pay off your total balance each month. If you cannot pay the total balance, try to at least make more than the minimum amount due.
Pay on time to avoid late fees and protect your credit history. If you can't pay on time, call your creditor. Have a discussion with them. Let them know you're having some problems.
Protect your credit card and account numbers to prevent unauthorized use and minimum potential loss or theft. Draw a line through blank spaces on the charge slips so the amount cannot be changed. Put your signature in the words CID on the back of your credit cards.
Keep a record of your account number, expiration dates, and the phone number of each credit card issuer. Just in case you were to lose that card, you'll quickly have that information.
Carry only the credit card you think you will use. Avoid making impulse purchases.
Think about the cost difference. If you purchase your item with cash versus if you did it with credit. And then what's the reason for that purchase? If you purchase a $500 television with a credit card and it has a 20% rate, it could cost you $1,000, over $1,000 to pay it off in 3 years. So make those purchases wisely.
Ignore offers creditors may send you to reduce or skip payments. You will still be charged finance charges during this time period.
Read all notices and information. Like I said, read the tiny print. It may include important changes that might be happening with your credit card.
Read and keep all documentation pertaining to the rules that govern your account that the bank sends.
If you've done a really good job with your credit card, reach out to the credit card company and ask them if they could lower the fee or lower the rate.
Limit the number of credit cards you have and monitor your credit card usage. Too many cards can make overspending tempting. Many people do not control their spending or manage their finances wisely. There are, however, good reasons to have more than one card, especially if your credit limit is not high enough on one card to cover an emergency.
Save cash for unexpected emergencies. Many financial and responsible people can become overwhelmed by expenses if they have a serious illness or they lose a job. So just be very careful. Use your cash for unexpected emergencies and kind of save for those times.
Be careful with blank convenience checks that your credit cards can mail you as a quick way to write yourself a loan. Expect to incur a transaction fee of several percent of the amount of the cash of each check. In addition, the interest rate can be much higher than the rate on your credit card purchase, perhaps twice as high. So sorry, Terry,
No,
even
what?
if you are offered a low interest rate initially, find out what interest rate you will pay when the introductory period is over. Most lenders also begin charging interest when the check posts to your account, even if they otherwise give you a grace period to repay your credit card purchase interest free.
So keep that tips page. It would be really handy for you in the future, even if you don't have credit cards now. Just keeping yourself aware of those tips so you can make sure that you make a really good, educated, do a good job with the credit card and looking at all of the stuff that you need to keep yourself financially stable for sure. So, okay, on page 21, it looks like we're going to do activity number 1. And this is Houston, we might have a issue. So we're going to read the scenario and determine whether the people are using the credit card responsibly or not, and then describe what would happen if they continue to use their credit card as described in the scenario. All right, Stacy. So in example 1, Maria receives a credit card bill. She gets a cash advance on another credit card to pay part of her bill. So let's think about that. Maria gets her credit card, but she goes and uses another credit card to get a cash advance. Now, we talked earlier that when you use a credit card to get a cash advance, it's more costly. Remember, the rate's higher. So this is just not, she's not acting responsibly at all. She'll never get out of debt by doing this. And she's going to pay higher finance charges by getting that cash advance to pay on this other credit card. So somehow Maria needs to get herself out of this cycle, maybe getting another job or looking for some additional income, maybe negotiating with the credit card company to see if they could lower the rate, which would lower her payments.
Example number 2. The balance on Marvin's credit card is $2,410. His limit is $2,500. He makes only the minimum payment, $20 a month, and it always close to the limit on his credit card. Is he being responsible? At this rate, it's going to take him years to pay off the credit card, and it will also cause him to have a high interest costs.
Example 3, Jerome uses his credit card for convenience. He pays cash for most small purchases. He pays his credit card back in full each month. So what do you think? Do you think that Jerome is being responsible or not responsible? He's absolutely being responsible. He's avoiding additional charges and just being really responsible with the way he's using his credit card. So good job to Jerome.
And example number 4. Kathy was excited to receive a credit card offer in the mail. She applied for the credit card without reading the terms. When the card came, she bought several new outfits for work. When the credit card bill came, she was surprised to find additional fees charged to her account, totaling $179. Do you think Kathy was being responsible? No, she was not. She did not read the disclosures, and the new clothes will cost much more than just buying them outright.
So in example 4 that Stacy just talked about, many times people get a credit card and they want to just maybe splurge and go out and buy some new clothes and do those things. It's not a responsible way to use your credit card. Again, just be responsible with your credit card and don't be crazy with it for sure. On page 22, it talks about if your credit card is lost or stolen, immediately notify your credit card company so that they can shut down that card. On page 22 of your workbook, we're going to talk about some additional tips for correcting credit card problems.
So here are some tips for correcting credit card problems. Reduce your expenses by paying off the balance on your highest rate loans first. They are usually your credit cards. Pay for future purchases using cash or a debit card linked to your checking account. Turn to a reputable credit counselor if you have serious problems paying off your credit card debt. This person should be able to help you for little or no cost. Beware of debt consolidation loans. These are loans that you get in order to help pay off when you own on several credit cards. They can either be secured loans or unsecured loans that you promise to repay. Look for hidden charges and ask for references before signing the agreement. Choosing the wrong debt consolidation loan can make matters worse and put you further into debt. Shop around so that you have a way of deciding on the debt consolidation loan that best meets your needs and budget. Research different lenders and collect quotes before deciding. Beware of debt settlement companies that charge high rates and application fees, and use bankruptcy only as a last resort.
Now let's talk about what if you did lose your credit card, if it was lost or stolen. Never give your confidential personal information over the phone unless you have made the call. There will be times that you may receive a phone call. The person on the other end is assuming you have a credit card, and they may be just trying to fish or get that credit card information from you. So never get that information out over the phone unless you've made the call. If you contact your card company before any unauthorized charges are made, you're not responsible for any of those unauthorized charges. So if you right away realize that you've lost your card, call right away, and then you're not responsible for those charges for whoever's got your card. Under federal law, if a thief uses your credit card or card number, the most that you're liable for with a credit card is $50. So just again, if you lose your card, immediately call and let them know that you've lost your card. We talked earlier to write down that phone number and have it handy just in case you need to contact the credit card company if you've lost or your card's been stolen. All right, it looks like we have come to the end of our module today, and here's what we hope you learned. The characteristics of a credit card, other cards that are similar to credit cards. We talked about debit cards versus credit cards, the different types of credit cards out there, how to shop for them and make sure that you're reading terms on those cards, how to apply for a credit card, how to use a credit card responsibly, and please make sure you do that, and then how to pay your credit card bill. So with that said, now we have the post test. On your workbook page number 23, let's see what you learned today. Question number 1. What are some important factors to look for and compare when shopping for a credit card? A, annual percentage rate. B, grace period. C, fees. D, method for calculating the interest. Or E, all of the above. In today's presentation, we talked about all of those things: the rate, grace period, fees, and the method for calculating that interest. So E, all of the above.
Number 2, what is the difference between a debit card and a credit card? A, when you use a credit card, the money comes directly from your checking account, but with the debit card, you can pay later. B, when you use a debit card, the money comes directly from your checking account, but with the credit card, you can pay later. C, carrying a balance on a debit card usually means you pay some interest. Or D, credit cards are linked to your checking or savings account. And hopefully you picked B. When you use a debit card, the money comes directly from your checking account, but with a credit card, you can pay later.
Number 3, credit is defined as the ability to borrow money with the promise to pay back the money plus interest. Is this A, true, or B, false? Absolutely, it's true.
Number 4, which of the following are benefits of having a credit card? A, it allows you to make a large purchase and pay for it over time. B, it can be useful in times of emergencies. C, it is more convenient and safer than carrying large amounts of cash. Or D, all of the above. And you're correct if you pick D, all of those.
Number 5, all of the following are benefits of a stored value card except A, they may have high monthly and inactivity fees. B, they offer the ability to make purchases using credit card networks. C, you use the card to give yourself a budget for a trip. Or D, they are only one way to give a gift or pay an allowance for a child. So the only one that is not true is they may have high monthly and inactivity fees, A.
Number 6, lenders will review the 4 C's to determine whether you are a good credit risk. Which of the following refers to the value of your assets and your net worth? A, capacity, B, capital, C, character, or D, collateral? And the correct answer is B, your capital.
Number 7, select all that apply. What can you do to manage your credit responsibly? A, pay your monthly bill on time or contact your creditor if you cannot pay. B, try to pay more than the minimum. C, use credit card to purchase items you want but do not have cash for. Or D, verify the charges listed on your monthly statement and correct any errors right away. So the correct answer would be A, paying your bill on time, B, trying to make more than the minimum payment, and D, verify the charges that are on your statement.
Number 8. Which of the following are examples of using your credit card responsibly? A, protecting your credit card and account numbers to prevent unauthorized use. B, charging items when you cannot afford the monthly payment. C, paying interest on items when you could have waited and paid for them in cash. D, knowing the terms of your credit card. Or E, A and D. And the correct answer is E, both A and D. A, protecting your credit card and account numbers to prevent unauthorized use. And D, knowing the terms of your credit card.
Number 9, if your credit card is lost or stolen, you should immediately call the credit card company or card issuer. A, true, B, false. I am positive you all chose A, true.
And number 10, what should you know about the APR on a credit card? A, what the amount is. B, whether the rate is an introductory rate and will change after a period of time. C, whether the rate is fixed or variable. Or D, all of the above. And yes, it's D. You would want to know all of these.
We again just want to thank you today for attending FDIC Charge It Right, sponsored by Bank of the San Juans. Thank you again.